To talking real estate with Champions Real Estate Team here at Berkshire Hathaway Home Services Ambassador Real Estate Company. My name is Mark Wehner, the second team leader, Champions Real Estate Team. Joining me as always is Russ Williams with Williams Mortgage. So we jump on here every Wednesday, kind of give you a rundown what we've seen in the last week of what's going on in the Omaha real estate market. I apologize, we said we're going to be on here about 2 o'clock, but I'm at home with a sick little girl and she didn't want to go down for a nap. So we took a little detour on that side of it. But let's jump in with our graphics and kind of keep it so everyone knows what's going on in the real estate market here for you. So over the last week, last 7 days, we had 360 new listings go live. We had just under 300 new contracts written with regards to that. And then we had 200 and just about 40 happy homeowners in regards to that. And so just looking at those numbers as we move forward through here, I'm just trying to look at the numbers. So we had 330 new listings the previous week and 260. So just kind of get my numbers on that side of it. But yeah, we're seeing, I'll show you the 30,000 foot view, which I think that is kind of the more interesting graphic that we have thus far, as we get into the January market, or actually headed into February, but finishing the January market. So we are under 2,000 active listings in the Omaha and Lincoln MLS here. I guess I'm pointing at the screen. I should probably be using the cursor. But we have 1,122 homes in the Omaha and Lincoln, or Omaha, or Douglas and Sarpy County area so basically the Omaha metro area. And we just went under 300 existing homes in the market. So Russ and I were just talking before we got on here. We were at 400 homes, 412 2 weeks ago, and we're already down 100 homes. So and then new construction has gone down as well in that 828, and months of inventory has gone down again. We were up at, I think, what was it, 3.3 2 weeks ago, and it's dropping again. Our average sold price kind of hanging out in that similar aspect of it. So I guess, we had a sales meeting yesterday with all the Berkshire agents at Berkshire Hathaway, and also had my mastermind meeting that I meet once a month with about 15 agents, talking about the market of what we're seeing and all that good stuff. But I think what we're kind of the agents that we're seeing out, out in the trenches for all intents and purposes is that the market is kind of resembling what it was doing last year at this time. Even though we're getting a lot of, national media saying there's going to be a housing bubble in sorts. I don't necessarily see that coming on. I mean, you can just look at the straight numbers. We're under 300 existing homes. That's all price points from $20,000 up to the $3 million houses that are out there. And what we're kind of seeing as agents is that there's kind of 3 segments of the market that we're kind of looking at and what activity is going on. So that kind of first-time home buyer, people that have been renting houses want to get into a house, that kind of under 350, under 400 is still very active. So like I said, I just had a listing last week, at 260, we had multiple offers, sold it in one day. Client was happy, seller was happy with the activity. In regards to that, and then we're seeing homes in that 400 to 800 price point that's kind of a little stagnant. And then you're seeing kind of 800 plus is still very active. So we kind of have the three segments of the market that we're seeing, just talking in our mastermind group and with other agents. And that's kind of across the board, what I'm seeing, what other agents are seeing. And so it's one of those that people are saying, well, I'm going to wait for prices to drop. I've had some clients of mine talk about that, well, let's see, there's a housing bubble and, interest rates and this and that. But what we're seeing actually in the market is kind of almost the opposite, is that we're only about down by 10% in our activity and our pending units from, 2019. So we're kind of didn't take a look at 2020 because that was kind of an abnormal year, obviously with COVID. 2021, 2022 just got crazy. So we're kind of trying to look back at something that was more of a stable market, which I think we're kind of getting into. And I think hitting that 7.5% interest rates in November has kind of helped drive some more activity, because now people were right around 6%, depending on if you're a government, FHA, VA, or conventional. FHA and VA are a little bit lower, 5 and 5.75, even a little bit lower than that. And just depending on what that market is. So I think, if you're kind of in that mindset of, the housing bubble, we're going to wait for prices to go down, depending on what segment of the market you're looking in, I don't necessarily see that happening. And I think sellers, if they're obviously pricing it right, meeting with agents and getting their house, tip-top shape, they're going to be reaping the benefits of that. We might not, like we've touched on in weeks prior, I don't think we're going to see that appreciation going, 15, 20% year over year. But I still think that they're where they're at. And I think the prices that we're listing them at are kind of built some of those prices in, but people still want those houses. Just the listing I had, and that, that the 260 price point, multiple offers, we can't disclose until it closes, but let's just say our seller was happy with the offer that she got, and other agents in our mastermind group are feeling the same way. And there's still people, in those price points, depending on inspections, appraisal gaps, those things I think are all going to come back into play, especially as the weather starts getting nicer. And we'll talk about rates here that potentially being improving is only going to, like we've touched in weeks prior, is that more buyers are going to come in the market. Obviously, more houses are going to come on the market. But I think the last couple of years, everyone is beating the drum. We have low inventory. Well, we still, I think they haven't released the numbers, but at Berkshire, I think we sold 13,000 houses in 2021. And I think in 2022, so last year, we were just about 1,000 units under that, but we still sold more in volume as far as price point. And I think that at Berkshire, we did I think he said the final numbers, we were at $1 billion of houses sold that did not even reach the multiple listing service. So those are houses that us as agents that we may have an exclusive listing, a broker exclusive listing, where basically it's just listed to Berkshire agents because we can drive the traffic, and those sellers are essentially getting, multiple offers in that situation. And ultimately everybody's situation is different. If they want to put it live on the market, if they want to sell it off market, within one company. So that's one of those things that when you're talking to listing agents, here at Champions Real Estate Team, we do have, the largest market share from a Berkshire standpoint in that existing market, that we can sell your house and even get that activity, get those eyeballs on your house, if that's something that, that strategy works for you. So there's many different, pros and cons to every single thing. And that's what we're here to do, is to coach you and educate you through those processes. But yeah, I think the housing market is still very, very strong in that regards. Like I said, I don't necessarily think we're going to see that huge, 10, 20% appreciation. I don't think we can withhold that, just our earnings, and things of that sort for the affordability aspect of it. But I think our affordability is going to be helped a little bit by interest rates. And, we can touch in with Russ here if he's got anything to add on what he's seeing in the market, but ultimately we can talk about what's going on in the mortgage rate. So how are we doing, Russ?
Good. I completely agree with you. In fact, whether you look at Zillow or whether you look at the National Association of Realtors data or Redfin, for 2022, they said that the average home had 2.2 offers on it. Now, certainly not all price points are going to have multiple offers, but we're already, Mark, seeing that in 2023. In the last 2 weekends alone, we've seen 5 properties in which we were involved in financing that had multiple offers on them. So this is nothing new. And if you think about it, when there are multiple offers, are we going to be selling the property? Is the seller going to sell the property for below list price? Maybe not. Multiple offers typically tend to push prices upwards. As far as mortgage rates go, part of the reason why we're seeing that extra demand is we've been seeing mortgage rates improve. As we've talked about many times over the years we've done this, is every 1% improvement in mortgage rates is going to increase borrowing power by almost 10%. And we've seen interest rates improve back to levels we haven't really seen since the early part of September. And we're anticipating that trend will continue. Obviously, there are some things that can upset the apple cart, such as inflated energy prices, war, huge losses of jobs. Those are things we can't ever forecast. But based upon the technical data we're seeing, mortgage rates should continue to improve, which means buyers are going to likely see more competition. News of today, in fact, just in the last 2 hours, the Federal Reserve Bank raised short-term rates by 0.25%. The market was already expecting this. And when they raise short-term rates, that is going to be for short-term lending, things like credit cards, student loans, auto loans, et cetera. That is not for long-term rates. In fact, we quite likely will be able to offer a better rate on a mortgage, which is a long-term rate, than we offered this morning, because the Fed's commentary in their press conference has been fairly dovish and fairly kind to bonds, and it's the bonds that drive mortgage rates. The Fed's indicating that they feel like they're starting to get a good grasp on inflation, and they're seeing some disinflationary pressures is the word they use, and that the Fed Governor Powell even suggested that they may not have to raise short-term rates as far as they previously thought. Bonds like this news. That makes bond investors feel like maybe inflation is in fact starting to become under control, and that's going to play very favorably for mortgage rates. Mark, we've talked that. In fact, I put a video out there. I'm expecting, absent some unexpected geopolitical event that we probably will see rates in the 5% range or even below sometime yet this year, which is going to pull even more people off the sidelines and into the buying field. So in the event that you're a buyer thinking about getting out there, now's the time to do it before your competition has multiplied many times over. And if you're a seller moving to another property, it's a good time now to do that before that next property is at a higher price point.
Yeah, and you can even get a house now at a 6% interest rate, give or take, and if that drops, refinance it this year. My wife and I, we did that. We bought our house in 2018 at 3.5%, and then by the end of that year, rates were down to 3%, and we refinanced. Our goal was to be, and everybody's situation is different, but our plan was to be in our house for a long, long time. So we're like, all right, well, you may pay, I think it was an extra $2,000 to drop that 0.5%. You take what's that cost you versus what you're saving per month. And I think it was like 2 years or whatever that if we stayed in our house, we'd be breaking even. And you just do the simple math. And if you're going to be there long enough, get in there before that competition comes in, like you said, because I guarantee you, if all of a sudden rates start falling, throughout the spring, summer, like you said, who knows? We don't have a crystal ball. But if that's the case, it's just only going to get, I feel it's only going to get busier. And, we're going to have the media basically, I would say, kind of coming and say, well, there's no inventory. Well, last year it was one in and one out. We sold a lot of houses. It still looked like we only had 300 existing homes on the market, but that weekend we had 100 of them come on the market on Friday. Those 100 were gone. And then there was like how this one, there was 300 pendings last week, 360, new listings. There's only 60 new homes that are really technically on the market other than the ones that are out there. And so those ones are just, and then new buyers come on the market, and then you're just staying at that same number stagnant. Because I think it's funny, I have, on my Facebook memories, they'll pop up. And so when I post these things, it's funny, I have 2 years ago, those stories and stuff will pop up that I show those graphics on our champions page. And it's just, to me, it's interesting to see like the numbers of where we were and stuff to that sort.
Mark will have people say, I'm just going to wait until interest rates drop to buy a house. And here's why I don't think that's the right way to think. But let's assume that rates are lower later this year. Let's say 6, 8, 10 months from now. If you buy a home, and just a moment ago, you showed a slide that showed the median home price or the average home price is right around the $300,000 price point. Your closing costs for a refinance are going to be probably at or below $3,000, give or take, which means if you buy that home today, and most forecasters and analysts, I know you can't say, but forecasters and analysts are projecting 3 to 4% appreciation in the Nebraska market. 6 months from now, it's reasonable to expect your home value that you bought today for $300 might be worth 2% more than what it is today, but it's not going to cost you that 2% to refinance your house. It's going to cost you less than 1% of the appreciation. You're still dollars ahead. So buy the house now. You can always refinance it later.
Yeah. So I mean, it's if you have questions about what we've talked about today, reach out to either one of us. We're happy to sit down and chat with you via Zoom, at a coffee shop, anything to that sort. My goal, and I know Russ's goal, is to get you that information so that you can make an educated decision. Does it make sense today? Does it make sense in 6 months? Are there things you got to clean up on credit? And what's the best way to do that? Those are things that we can kind of help strategize with you to get you on the right path moving forward. But I mean, I'm excited about this real estate market. I think it's a great time to buy and to get in. And I think we're also seeing another segment. I know we've touched on it in previous times, is real estate investors. Because right now there's a lot of buying opportunity out there for some of those investors to get out there. And I think that's something we also talked about in our mastermind group, as well as our sales meeting, is that's another segment of the market that you'll potentially be competing with, as, a homeowner, and some of those investors side of it too. So, but yeah, so I think it's a great opportunity. If you have any questions, we'd love to chat with you and get you to where you need to be, whether you're buying or selling a house, or even looking at real estate investment and creating that generational wealth. So you can reach out to me, 402-672-7670, or give Russ a holler, 290-8936. And we're happy to sit down and chat with you and give you our 2 cents of what we feel, and, just lay out the different options. I think that's one of those things too, that sat down with a couple, was it last week, 2 weeks ago, and just they're first time home buyers. And does FHA make sense, or does conventional make sense? FHA, you're 3.5% down, but you're also paying a 1.5% upfront mortgage premium. That's basically going to Uncle Sam so that you can get into that FHA. Well, if you take that 1.5 plus 3.5, that's 5%. You can get yourself into a conventional loan, put more money in your house savings account into your down payment rather than giving Uncle Sam 1.5%. So those are some things that some agents don't even tell you because they don't think about the different loans. They just go, yeah, FHA, 3.5% down. Yeah, it's a great opportunity. You get in the house with less down, that's great. But what are you giving up to get that? There's always kind of a thing on the backside that you always got to look out for, and if it means saving up for an extra month or two to get that 1.5%, savings to basically put into your pocket rather than Uncle Sam's, makes sense to me. So those are just things that we like to sit down and chat with you about. And if it makes sense to do FHA, awesome, great. If it doesn't, if it makes more sense to wait a little bit, it just depends on, what works best for you. And that's, our job is to give you that information, let you sit down, kind of digest it, and then come back with questions. We're here to help you in that regard. So, but I appreciate everyone taking the chance to listen. If you like, subscribe us. That helps us out, and on the YouTube and all that kind of fun stuff and all the social media platforms. But appreciate all your guys' time to listen to us, and hopefully provide some good information. If you have any questions or you want us to talk about anything else on any of our, next week or any of the future weeks, give us a holler, shoot me a message, and we'll cover it and get your questions answered for you. So appreciate your time, and we'll see you next week. And how about those Chiefs, right?